Today I'm going to give you guys a complete tutorial on how you can yield farm for passive income using cryptocurrency and the blockchain. So quickly to recap what yield farming is, it's when we go out and look for positions that we can invest our cryptocurrency assets into, and in return we can earn tokens such as Aero token, Cake token, and plenty other tokens. So remember, there's a difference of yield farming and liquidity mining. In liquidity mining, it's strictly just earning the fees and the real yield from the trades. In liquidity mining, you're strictly just earning the fees and the real yield for providing liquidity. But in yield farming, you're earning that as well as additional incentives for providing liquidity. So the first site we're going to be using is Defi Llama. This site is 100% free, and let's go ahead and head over to the yield section. So this is the part that you're going to want to pay attention to, because for the first part of yield farming, you're going to need to have a certain strategy in place. And to find a certain strategy, you first need to have a cryptocurrency in mind that you want to invest into. So first, I'm going to go ahead and add some crypto assets in here that I do believe in. So we're going to go ahead and type these in. Boom, like so. So I'm going to go ahead and put a bunch of assets in here. I just type some in, some of which I already have in my portfolio. And we're just going to see what we can identify here. So right off the bat, we have 1,659 pools. And I haven't even put ETH on this list because a lot of these assets will already include it. And watch, if I do put ETH on here, it goes from less than 2,000 pools to almost 6,000. So I'm just going to take off Ethereum for now. So we can start to filter things down. And the way I like to start is going to TVL and putting a minimum of $1 million. So there, it's normally just the general rule of thumb that I like to use. Look, already we went from like thousands of pools already down to like 310 pools. So this is the general strategy we like to use. So then to clear things up even more, we're going to go ahead and select the networks we want to be on. So hit chain, and then I'm going to first of all hit clear and start selecting. So me personally, I like to start with Ethereum as well as a couple other networks. So keep in mind, if you guys don't have larger than like $10,000 or $15,000 to put into a couple positions, which keep in mind you are probably going to want to have more than one position, then you're probably not going to want to select Ethereum network. So I'm going to go BSC as well as Solana. Let's go to Aerodrome. Where is that? Right here. I'm going to go to Base and then Polygon. I'm going to go ahead and select one that I've seen blowing up recently. It was called Ton. Where is that? Oh yeah, Ton here, and then Linea. All right, great. So now it's at 257 pools. So we went to almost 2,000. Now we're narrowing it down even more. So we can already start looking at these things, but I like to sort using even more filters like APYs and stuff like that in categories. So at the moment, I'm not going to mess with the category because I don't care too much about these. So same thing with these attributes. I could select them if I want to, like even something with like a stable outlook. It's gonna narrow it down even more. Like it's just gonna show more stable stuff and more blue chip stuff. Same thing with high confidence. Reason being is I'm looking for high return stuff, and for the APY I'm gonna put a minimum of 100% and hit apply. Sweet, now we're at 15 pools. That just narrowed down a ton. Keep in mind, now that we did put over 100%, we don't have too many good options, and you can see a lot of these are on the Orca network. Even though we put in 100 APY, there's still not too many good options, and a lot of these are over on Orca. And keep in mind, when you are providing on Uniswap and Orca, a lot of these are concentrated liquidity. So that means that APY you see is going to depend on your range. So typically it would show a low APY on DeFi Llama, but once you dive into it, it would show a much higher one sometimes. So actually, we're going to go ahead and do a minimum of 50%. And now this gives us a total of 30 pools. Sweet. Now we can look through and see if there's anything that I want to include in my portfolio. So next thing, we're going to actually start to go ahead and identify these opportunities and write them down on something like a spreadsheet. So we're going to write down ones that just truly look intriguing. So the ones I want to pay attention to first are the ones with higher TVL, because typically the ones with higher TVL are more consistent and have higher scalability. And when I say this, I mean within the project and within the strategy. So I'm going to go ahead and copy these indications from DeFi Llama and go ahead and paste them onto my spreadsheet. Like so. So now from there, we can go ahead and look at things that are looking interesting. Now, a lot of times when I right off the bat see a pool with like 4,000 APY, 3,000, I like to kind of ignore them because there's a lot of factors that could inflate this, such as like having high volume in like the past week or something that doesn't seem that consistent to me long term. So in terms of more solid looking pools to me, this pool is doing 82%. I see USDC to Aero, and it has the highest TVL out of all the pools that are looking solid over here. So it's 81 million. And then right under it, I see USD to Aero, but over on Extra Finance, and it has $40 million TVL. So what does this tell me? And also the APY shows higher. So this tells me that Extra Finance, which is a leveraged Aero to USD position, is on Aerodrome, but they're allowing you to leverage it through Extra Finance. And you can see that like half the people that are in USDC Aero are leveraging it through Extra Finance. So this seems like a really solid position, and you can go ahead and write down on both or just one. I'm going to go ahead and go with the extra finance one. So I'm going to write here for pool USDC/Aero, and it's over on extra finance. This was on the base chain, and the TVL was like 40 million. I want to say, yeah, 40.14 million. And then it says the APY is roughly 129%. So it is looking pretty solid to me, but one thing I want to go ahead and do is open this up in a new tab. So it's going to show us this yield chart and give us some data on the actual position. So look, ever since like halfway through April, the TVL along with the APY have been like trending down. You can see that in both of them. So this is something to consider, and I assume it's most likely because the overall Aerodrome TVL has been declining. So this is something to consider here, and I assume it's most likely because the underlying Aero token APY has been declining down as well. Now that is something to consider, and I assume it's because the underlying Aerodrome APY has been declining recently as well. So this is one that I'd rather have as a sort of short-term position. So I'm going to go ahead and label it that. Let's see. So USDC/Aero, and then here I'm going to put short term. I think I did that wrong. USDC/Aero. There we go. So now that we put it short term, basically it's for us. So when we do get into this position, if we do, we can monitor it closely. We can just see what type of yield we're getting and then potentially reinvest into it. And we can see what type of yield we're getting over time and potentially reinvest into a different position. And also over here, I see this Wells to Aero doing 270%. However, I would want to make sure that this is actually a position that I want to include into my portfolio and take on exposure to Wells. So assuming that's the case, I would go ahead and jot that down. So let's put Wells to Aero, spelled that wrong. So this one is on Aerodrome and the chain is base. So you guys can already see a trend right here. Aerodrome is where a lot of these positions are going to be for yield farming. And it seems like that's where a lot of the high yields are and where the trend is at the moment. But again, Aerodrome was more hyped in May, and different trends happen all the time in the DeFi space. Like different projects just pop up and start to do really, really well, then they die out a bit. Like earlier in the year, we had Orca, Solana, Radium, projects like that. And months ago, it was like Aerodrome, Velodrome, Extra Finance, and projects like that. So we're kind of waiting for that next big trend to come along again. Like a trend with 1% a day or something similar would just be sweet. So again, for this Wells to Aero, we're gonna do the same thing. Let's go ahead and open up the yield chart. So as you can see, as the TVL starts to come in, the APY does go down a bit, but not as bad as the USDC to Aero chart. So this one does seem relatively consistent looking at the chart. So as long as I care about Wells token and think it's gonna do good in the future, I'm gonna include it in this portfolio. So I also need to write down the 270% APY. Estimated, boom. So let's see if we can find some non-Aerodrome positions as well. So I am looking for stuff that has the reward APY over here, and I found like a decent position, it seems. So this BTCB WBNB over on Thena. So I'm gonna go ahead and add this to the list. So this is on Thena, non-Aerodrome, not Extra Finance. So this one has a 3.76 million TVL, and the APY is looking like 61.51%. So keep in mind, Thena has concentrated liquidity, so most likely when we dive in and start to simulate the results on Thena, it's going to end up being a higher return. So basically, we're going to start to do due diligence on these positions and look really deep into the underlying assets. So this one has Bitcoin and BNB. Now, if you've heard of BNB before, which a lot of people have, then sure, it could be something to add to the portfolio. But if you're looking at something like Wells Aero, and you start to look into Wells and you're looking at the platform and you're kind of like, I don't really know what this is, I don't know if I trust it, or I don't really care too much about Wells, and you can lose money from your underlying assets falling in value if the underlying tokens have a drop in price. But also you could make money if they go up in price, and you could make money from the yield farming, and you could also make money from the rewards that you're receiving for providing liquidity. So theoretically, we'd go down this list further and find like 20 solid positions, like find 20 of them. Once you do that, take a look at your chart and look at the other charts such as the APY chart and TVL chart and narrow it down to like 5 or 6. You could even narrow it down to like 7 positions just to stay like well diversified. So for now, I'm only going to go with these 3, and assuming we were going to pick these 3 positions, our next step would be to deploy into them. So we can do that by going over to the platforms. Now I'm going to start off with this Extra Finance one. Remember, this is on the Base network, but it also supports Optimism as well as Base. So we're going to go over to Base and then go over to search for the Aero pool. So when we're searching for the Aero pool, we could find other opportunities, but in this scenario, I'm not looking for that. I just want to show you. So we're searching for the Aero pool, and we might find better opportunities, but in this case, it doesn't look like it. So it looks like USDC Aero has one of the best returns. Keep in mind, this is a leveraged position. So you could leverage up as much as you want, and I would not recommend using the max leverage because number one, you could get liquidated and you could essentially lose a lot of money in your overall position because maybe you borrowed too much. And then number two, you have increased price risk. So if Aero shoots down in price 10% and you have 3x leverage, then you're going to lose 30%. So if Aero goes down 10% and you have 3x leverage, then you're going to go down 30%. So I'd probably be comfortable using something around like 2x leverage. It's not too little, but it's still leverage. And then you'd go over to farm here, but you need to make sure that you're comfortable using leverage. But again, you need to make sure that you're comfortable using leverage because it's very risky. And if you don't know what you're doing and you end up seeing like a downward swing in the market, you could end up losing like all your money. So just be careful of that and know that it's a risk. So when it comes to deposit assets, I have the option to borrow two different things, either USDC or Aero. So we have to choose which one we want to borrow. And if we want to borrow USDC, let me tell you what's going to happen. Some of that USDC is going to instantly be sold into Aero, and the other USDC is going to be paired with the Aero basically. So we're essentially creating a short on USDC, which means that we're long on Aero, and we think that Aero is going to do well. But if we were borrowing Aero, then we're pretty much putting a short on Aero because we're selling some of the Aero for a stable coin that's going to keep its value. So we're assuming Aero is going to go down in price and we'll be able to buy it back at a better price and essentially just pay back the borrowing. That is exactly how this leverage happens. So as you can see right now, the Aero borrowing interest is like 42% and the USDC is 21% about. Don't just go with the cheapest one, go with the one that makes the most logical sense for your strategy because there's two different strategies here. One is borrowing Aero and one is borrowing USDC. So as you can see with that 2x leverage with that 42% interest, our APY would be about 204%. Whereas if we were to borrow USDC, it's about 233%. But remember, it's a different risk because one we're going long and one we're going short basically. Just keep that in mind. Now, if we wanted to deploy just directly into the Aerodrome strategy, we could go to that liquidity section and pull up that Wells Aero. It's going to be the same thing as if you were going into USDC Aero. So I'm going to go ahead and type in Wells. Yep, here we go. Wells Aero with 5.3 TVL. So next we'd go over to deposit and check that we have both of each asset. So one way to check of how much of each asset we'll need is if we type in 100 Wells, it's going to tell us how much Aero we need exactly. So now if we pull up both tokens price, we have Aerodrome right here and Wells. So the Wells price is 0.1376 at the moment. So if you go ahead and multiply it by 100, that's going to be roughly $13.76. And then we need 19.06 Aerodrome. So if we go ahead and throw that into CoinMarketCap, 19.06, it shows as 13.78, which is very close. See, roughly same because we need 50-50 of each asset. And that's exactly how full range liquidity pools work. So basically, if we were to have $100,000, we would need $50,000 of Wells and $50,000 of Aero. Now, would I deploy $100,000 into this pool? Probably not. That's because I think it's pretty risky. And then if we wanted to deploy into Thena, we could go to the Thena.finance website. We could go over to the pool section. Then once we're here, once again, we go ahead and find the pool. So this one was Bitcoin B to BNB. See, it's right here. Then if you go ahead and hit manage. So there's a couple of options. We could go with the one that manages it for us, but typically has a lot of impermanent loss. Or we could go to manual and choose the range ourselves. And essentially, this would be going to deploy it ourselves. So it's up to you how you guys want to do this. But if you are going to choose the range, I'm not going to dive too deep into that in today's video. But here at Builder Wealth, we have other videos where we show how to find these ranges and do concentrated liquidity. With that being said, over at Builder Wealth, we help people build passive income portfolios using decentralized finance. And we've done this with over 120 people already. And we've worked with some of the biggest names in the space like Polygon Labs, Aperture Finance, Aerodrome, and Velodrome. And if you're interested in working with us, I'm gonna leave the link down below to go ahead and see if you qualify. We are pretty strict with accepting people into our platform since we do only work with about 15 people per month. Another thing I want to say is that we recommend having at least $20,000 in capital if you're interested in working with us. And this is because we do charge for our services, and $20,000 is a good amount to offset the service fees. And we get hundreds of applicants every week, so it's completely up to you if you want to join or not. Anyways, hope this video was helpful.